Today we're going to be talking about agency bill, and I have a good dear friend with me who I consider to be a subject matter expert in agency billing, Crystal Temple-Frawley. Crystal, should be Monday, but it's actually Tuesday because it's the day after Labor Day, but it feels like Monday. Happy Tuesday.
Yes, it's the Mondayest Tuesday ever.
Is the Mondayest Tuesday ever. Yes, exactly. No better way to start fall and start, this post-summer, post-Labor Day than talk about agency bill. There probably are a few ways that are better, but I kind of like this topic. So we're going to, I say we jump right in, but just quick for the audience, why don't you give a quick intro? Crystal, who are you? What do you do?
Yeah, so professionally, about 20 years in insurance accounting and operations. I've owned multiple insurance bookkeeping firms, been involved in multiple projects at industry association levels and software development levels. So this is very much my niche, and agency bill and commissions, which we're not talking about today. Those two things I'm probably most passionate about. So I'm excited to have this chat.
Yep. We are probably going to talk about a lot of those things in the future: commissions, bookkeeping, chart of accounts, things like that. We're going to keep it simple today. Agency bill, it's been a topic on the top of my mind. Let's level set right away. What is agency bill?
Yeah, so probably the simplest way to put it is who is actually being billed for the policy. So we have direct bill, which probably most P&C agents are going to recognize, like personal auto, typically homeowners, even if it's mortgagee bill. Those are all direct bill policies. And again, in the simplest of terms, the carrier is billing the insured directly. Sometimes those insureds can make that payment at the agency's office. That does not change the billing type. It's just a courtesy that the agent is then remitting those funds. Agency bill, however, is regardless of if the insured pays or not, the agency still has to pay it. It is billed to the agency, and probably the biggest difference is how commissions are received, which we'll go over in much more detail later. But direct bill, commissions are received after the fact. Agency bill, you withhold them up front.
Okay. So there are trade-offs, right? Something that I was quite surprised about was been generating some content around agency bill, and I was surprised at how many agencies don't understand it, right? So it gets to that not all agencies are capable or really credentialed to be able to do it. Typically, when an agency does agency bill, from your experience, what are the types of things that the agency is doing that allows them, one, to qualify, but two, they just have what kind of business are they writing, where it almost like leads them to the possibility of doing agency bill?
Yeah, so typically a lot of commercial policies are going to be agency billed because you're having to access an excess and surplus market. And most of the time, all of your E&S business is going to be agency billed, at least first year. A lot of your wholesalers are now having these new programs where first year is agency, second's direct bill. But regardless, typically your E&S is going to be agency billed. Another thing that we're seeing a lot of is, and you're from Florida, so you can feel this, but a lot of your coastal agencies. So I'm in North Carolina, all the way down, Southeast Texas. A lot of your personal lines policies are also having to be accessed through an E&S market, which again is going to be probably more than likely agency billed as well.
Yeah. So E&S is a big part. Mm-hmm. Likely commercial, likely specialty. Those are kind of the dynamics. Can be done though with admitted, but those are few and far between. Can you provide like some examples where that might happen, or secondarily where it might actually be beneficial for the agency to offer agency bill?
Yeah. So to your point, preferred admitted markets, there are not that many anymore, as you mentioned, but Travelers still does it. Not all of them, some of them. Cincinnati, Auto Owners, some of your very established admitted markets do still offer agency bill. And that's more of a legacy offering versus a preferred offering on their point or on their part. But yeah, so when we start looking at kind of agency bill as a whole and what are some of the benefits and why would we do it, sometimes you're forced to do it. Like I said, if you're having to access this E&S market, you're going to be agency bill. How you manage that, again, we'll get into it a little bit later. There's some options there, but realistically, we're looking at agencies that want to really focus on customer service.
Yeah.
That is huge. I tend to tell agencies a lot. You did all this work. You did all this work to get this agent or to get this client. Everything you've been doing has been branded. Very likely, if you're heavy commercial, you have a portal. If you're on an applied product, you have CSR 24. You have all these things that are branded and that are driven through the agency. And why would you ever want your billing to be anything different than that? Having complete control over your billing process for your insureds, to me, is just another part of that customer service, fanatical customer service piece. And there's plenty of other reasons too. That's my big one. It's that customer experience. One of the other reasons is from a cash flow, as a cash flow tool, you're getting to retain your commissions up front instead of having to wait till the end of the month to get them. That's huge. There are some caveats to that though. How you're choosing to bill your insured, when you choose to do it. I'm a huge advocate of billing and then binding. If you're binding before you receive that payment, kind of opens up some risk factors for the agency that we don't really want to get into. But if you're collecting money before you bind, you have your commission immediately. That's huge, especially for producers, that are relying on those paychecks.
In your experience, is that like the number one thing usually that's attractive about agency bill?
I think so. I think the customer service piece, that was typically a harder sell. And that makes me sad. I think that should be the number one thing. But typically when we're talking agency bill, the biggest conversation starter is you get your money faster.
Yeah, and so for the audience sake, like the customer experience element of it is like, think of on personal lines, auto, homeowners, and umbrella, likely would be 3 separate bills that your policy holder has to handle. And I always say, like, I'm a fanatic about touch points in insurance companies having these quality touch points. Billing is usually not a quality touch point, right? So I think from a customer experience standpoint, the agent can look at it and say, well, if I can wrap 3 into 1, that's one bill. I've now, it's still probably not a quality touch point, but I've reduced 2/3 of the negativity of the billing aspect of it. So there is a customer experience, piece to that I think just becomes really important.
Yeah, there is. And one of the other things, and this I think is sometimes lost in the conversation as well. If we're giving our insureds different contact information, you need to call this company to make a payment. You need to call this phone number at the same company to file a claim. It starts getting a little muddy for the insured. And I am a huge fan.
And for the agent.
And for the agent, right? We don't know what's going on. There's no visibility into what is happening.
Or the way I kind of see it, Crystal, is there's a billing problem and the customer is irate or just upset. They're going to drag everybody into it. And now you have duplication. So like that account is eroding margin simply because now like everybody's involved trying to square away what the billing is. When you have agency bill, the agency is now responsible for it and the experience around it. And one stop, one phone number, they can take care of it. And frankly, I think for a lot of Americans, they think the agency is the insurance
They
company.
do. They think it's them regardless. So why give them a second, third, fourth phone number to call?
Yeah. So so now we get to, I think a big part of it is your commercial E&S $100,000 policy. With agency bill, you can premium finance it. So now you can structure a nice payment structure and amortize that policy over a period of time. That improves the customer experience aspect of it. That now adds another degree of complexity because now there's another stakeholder involved in the accounting of what is actually happening there. But we have premium financing kind of spreading that out. But then when it's billed and it's bound, right, in the account of the agency comes all the money, correct?
Well, sometimes. So it depends. So that's where we start getting into options. And a bit of a side note. Premium financing also opens up another opportunity for revenue for the agency as well. We can certainly elaborate on that later. That is a point we'll need to circle back on. But financing, we have multiple options. And I absolutely love that finance companies are giving agencies options now. So typically, and this will age me and date me quite well. When I first started, we actually printed finance company checks in-house. We had check stocks in our office. We were authorized to print checks on behalf of the finance company to then deposit into our trust account. After that, we certainly moved to EFT, which was much more efficient and a lot less risky for the finance company. And we were accepting the full finance funds. So if we had a $100,000 policy, and this is not going to be the math, but we're just going to do it to make it simple. Let's say it's just no additional taxes and fees. So the down payment's probably around $25,000. Finance is $75,000. Finance company gives us their money. Insured gives their money, and then we're remitting the full premium less our commission. So we're probably sending about $90,000 to the wholesaler. Keep our $10,000. Easy accounting. What we started to do probably about 10, 15 years ago is we started actually funding the market, or the insurance, the finance companies were funding the markets. So that $75,000 finance portion, instead of coming to the agency, it was going directly to your wholesaler, your carrier, whoever your billing company is. Mm-hmm. That $75,000 goes straight to them. So all the agency deals with is $25,000. Much simpler, right? And then instead of sending $90,000, we're sending $15,000 because we're still withholding our full commission up front, even if it's just the down payment. Again, for us, easy accounting, less money movement. But either way, the insured's paying that $25,000 down payment to us, to the agency.
And that opens up one additional, I think there's actually two additional revenue opportunities for agencies. But in that particular case, you're holding money in your trust account for a particular period of time, which most insurance professionals should recognize is a float. So you're earning interest on that money before, what typically is it 30 days before it needs to be remitted?
Yeah, so typically we're seeing between 30 and 45 days. Usually it's the 15th of the next month. So depending on when you bound the policy, and that's typical, right? If it's an audit or if it's some other certain types of policies, you usually have maybe like 15 days to remit. But typically we want to get that money out within about 30 days.
Yeah. So you get commissions up front.
Yep.
You get more control over the customer experience, right? There's if it's premium financed, you can have arrangements with the premium finance company to have a revenue share on that. You have the floats, and I've worked at agencies where you're talking the float is in the tens of millions of dollars.
It is.
So in like in situations, can you imagine like the early 80s when interest rates were like 18%?
Oh yeah.
What that meant?
Yeah.
To that kind of situation. So there's four like really positive elements. There's one other one here, I don't think it's huge, but it's a factor. And if you multiply it by the, if you're an agency in Florida, I would think 100% of P&C agencies in Florida are doing E&S business, which means if you can agency bill that, you can also charge a policy fee.
You can. Yep, agency fees. So I am a huge advocate for agency fees. It's one of the first questions I always ask an agency is, are you charging fees? It's a phenomenal way to increase your revenue by policy. One thing to note, depending on where you're at, there are state-specific regulations. Some of them are very, very nuanced. For example, and again, this is very high level, and I encourage each agency to do their due diligence on it. What it's called is very important. New York, for example, it's called a broker fee. The management systems that we all use, it still references as an agency fee as the type, but it's a broker fee. In Florida, there are very, very strict guidelines around what it can be, and it's excess and surplus, and it has to be reasonable. Almost everywhere, though, I don't really think there's any exceptions. You have to have a disclosure form signed by your insured. Most of our agencies just add it to the back of their application packet. It's one more form to sign. But that is an incredible opportunity to recoup some of the time that you've spent on these accounts, especially large commercial.
Well, there's overhead, right? And I think once you get to E&S, having been an owner of an MGA, I would tell people, like within the organization, it's like the commission that we get is essentially because we're part of the distribution. We sold something, and that is what we get paid. But there's a lot of office work in the background that is outside of the actual selling of this policy, and we should be compensated for this. For example, in my MGA, we had catastrophe models that were, two of them that when you added them together were in excess of $250,000 that we had to amortize across everybody, right? And it's like we're basically giving away that information that we were using for underwriting for free. So we saw the policy fee as, hey, we're doing back office work, we're doing work that's kind of overhead and need to be amortized across all clients, right? And we're issuing a policy. Like we're actually doing work that a carrier would normally do to issue a policy. That's work, that's effort. And that's worth, I don't know, for an individual policy, even with automation, $50, $100. So for the agencies that are listening to this, and you got E&S, you're writing coastal business, you're doing specialty, you're doing commercial, and you have 1,000 clients, and you can charge 100% policy fee, that's an extra $100,000 of revenue for your agency that you ordinarily have. Now we're not even counting like the premium finance revenue share around that, or if potentially the float, or getting your commissions early.
Yep. Oh, absolutely. And one of the key benefits to agency bill is at being able to add in that agency fee, and it's not a pain point for your staff. So if you're trying to add an agency fee to a direct bill policy, absolutely doable. You can do it. You can bill the insured the down payment or their premium in full, add in the fee through your billing.
Yeah, they're going to be like, what the hell is this?
It's just not quite the same. Yeah. So again, huge fan of agency fees.
Yeah. So now I want to get into the trade-offs, the drawbacks.
Yeah.
So before we get into the drawbacks, because we've been promoting this thing, I think you need to stand up, show your shirt.
Oh yes, agency bill is cool.
Agency bill is cool. Okay, but it's not always cool, and not all agencies are going to qualify for it. So let's kind of like roll down the list of agencies. One, that just will not qualify, and two, are probably not culturally or technologically prepared to do this, although the technology is coming to allow this. But let's talk about agencies where you would, if you were there inside bookkeeping and they brought up agency bill, where you would kind of counsel them around like, I would back off on your expectations on this.
Yeah. So if I'm really honest, there is no agency that shouldn't do it as far as like types of business. If you're exclusively personal lines, there's a very good chance if you're not dealing with it right now, that you will be dealing with it soon, where you have to access E&S markets, right? Well, actually should be prepared for that. You may do 100% admitted standard auto right now. However, you may have a risk that you need to place. So this particular conversation is important even for them. But one of the big things is, even though it's not required by all 50 states, highly, highly encourage you to have a separate trust account. We have a lot of agencies that I work with. The states don't require it, so they don't do it. Absolutely okay. However, best practices does dictate you need a separate trust account. That for us is actually something that if you come to us and you don't have one, we will work with you on getting one set up. And we ask that you switch around where that money's going. Having a separate trust account to us is best practices, and it is a very important piece of managing your agency bill process. So that's the first one. You need a trust account. Encourage you to have a trust account, even if your state does not require it. That's a big one for us.
Before you go to the next part, it's more than just best practice. Mistakes there can generally be thought of as, when audited, can show fraud.
Yep. And
this is insurance. Like, why did Al Capone go to jail? It wasn't because he whacked a few people. It's because of his taxes.
Yeah.
Insurance regulations are really strict, and I do see newspaper articles, clippings, news articles around agents who go to jail.
Yep.
Like, when you start to commingle that money, it's the accounting can become impossible to keep track of. Now you can't unwind it. You're in trouble.
Well, so I'll give you two pretty extreme examples, and this is not a doom and gloom. I don't mean for it to, but it is very relevant.
It's the reality.
It is. So the first one is you have an agency, one bank account, you have $10,000 in the bank, right? And there's some trust money sitting in there. Let's just say you have $2,000 of insured money sitting in that bank account, right? That really means that only $8,000 is available for you as an agent. This is all one bank account, right? Well, if your payroll is $8,500 and it comes out of your operating account, you're out of trust. You are actually going to be in some hot water if anyone finds out about that. So, and that's a very, if you're looking at a much bigger bank account, right? These things become very hard to detect if you're not paying attention to them. On the other side of that, from your employee standpoint, we see a lot of fraud from employees. And it is also very difficult to catch if you don't have a separate trust account, because there's never really a shortage of money. One of the top ways that we see employee embezzlement with insured payments is an insured comes in, gives the CSR $100. The CSR goes to Progressive's website, makes the payment. So the insured is whole, right? The payment's made, but that $100 never actually gets into the bank. So the agency is out $100. Well, if you have a trust account and you're balancing it down to zero or really close, or you're reconciling all those things, you're going to see that missing $100 very, very quickly. Versus if it's in your operating account and that churn is just so high, your balances tend to be higher, you're not going to feel $100 missing. Yep. But that's a big one. That is the majority of the employee embezzlement that I've seen has been with insured money.
Yeah. So trust account. Necessity. Let's just call it a necessity.
It is.
Regardless of state rules, it's a necessity. Secondarily, bookkeeping and accounting, because you're handling that now.
Yeah. So it's a little different, right? And this is actually a really big issue in the industry right now. Is most of your local bookkeepers and CPAs, they have no idea how to actually handle trust money. So trust money coming in, insured funds, it's not revenue. Premium payments on behalf of insureds, it's not an expense, but we see that a lot. So from the beginning of this, you need to make sure either in your management system or if you're using something like QuickBooks that you have it set up. Because if you don't have it set up right, there's some big issues that can result at the end of the year or even monthly if you're looking at your top line revenue. it's going to look really, really skewed if you've counted that those deposits from insurance as revenue. And a lot of bookkeepers have done that. We see it a lot, non-insurance specific bookkeepers. So having a system set up in place, most management systems are very good at it. They do their job well. Some aren't as great, but they're still there. They work. But there are plenty of systems that you can put in place, even if you're just using QuickBooks. The way you set up these accounts, how you record customer money, how you record and keep track of your retained commissions, your retained agency fees, sits on the balance sheet until you move the money. Those are all very important structural things that also need to happen before you ever get started agency bill. And if you've been going that way, now's the time, right? What they say is yesterday was perfect, but today we'll have to do.
The best time to do something was then.
Yes.
The second best time is right now.
Yeah, thank you. Yeah. Yep.
Okay. So trust account, bookkeeping. You have to have specialization there.
Yep.
It's different than your operations, right?
Yep.
Technology.
Yep. So
that would include the agency system. So being really good at like the agency system tracking stuff, but I have a feeling you're going to say more than that.
There is. So right now there are insurance is so great. I love it. Almost my entire professional career has been in insurance, but we tend to lag behind in a lot of things. And insured payments, insurance accounting is one of them. But I'm so excited because that's changing. People are finally paying attention, right? We are making such progress in this area. However, if we're talking about customer experiences, we do have to take a step back and look at different options. So an AMS in your agency should never be replaced. They're built for insurance. They are generally very good at what they do. It's not just a document management system, right? There are ways to utilize your AMS kind of as your source of truth for everything, whether you use an external CRM, whether you're using additional accounting resources or invoicing resources, all those different things. Your AMS is still your source of truth. So there is technology out there that makes the billing easier. Billing in a lot of management systems is not intuitive. And when you have account managers who are not bookkeepers that are trying to invoice, it could mess your books up pretty quickly. Some account managers are 10 times better than any bookkeeper I've ever seen. They've probably been doing large commercial for a long time, and they can invoice circles around me. But most account managers, they shouldn't have to do it. They shouldn't have to learn bookkeeping, but they're stuck doing it, right? That's a huge problem. So the technology that's out there now that's really starting to gain traction, it makes that process easier for your account managers, which is fantastic. But even better, it's a very familiar UI and interface and UX experience for your insureds. So insureds are very accustomed, all of us are. We log in, we get an invoice, we click to pay. Right? We one click in an email, or we log in, we type our credit card number in. None of that's intimidating to us as an insured. None of it is unfamiliar. So having technology that then leans into that is huge. And there are several companies that are working on that in different pieces. And what they're doing is working well. I still think that there's other places that we can also improve the experience. But that is one there's technology now that makes it a phenomenal experience for your insured, makes it a much easier experience for your account manager, and it still ends up in your AMS.
Yeah. I was talking to a mutual friend of ours this morning this goes back to the customer experience element of what we keep bringing up. And he told me that there are some admitted carriers on the personal line side who are so bad at invoicing and billing that they're almost encouraging their agents to go to agency bill.
Oh, absolutely.
And take it off their plate. And I would say that there are a lot of like really poor insurers. I mean, I'm doing webinars where we're doing webinars on communication and how you can like use billing as a touch point. I mean, almost the entirety of insurers don't do that. So like that's just an amazing example of like the customer experience. But I want to give one more, because we're gonna transition. For those that like got excited about this, we're gonna transition. But I want to give one more bone around customer experience. My first experience with Agency Bill was at a regional agency in New England. Our largest account was Phillips Academy in Andover, the Phillips Academy,
Yeah.
the ones that produces presidents.
Yeah.
So they had the commercial account and they had the employee benefits for that. As part of the employee benefits, they added auto, homeowners, personal lines. Anything you bought from this agency could be pulled out of your paycheck. And it was amazing because, and almost everyone signed up for it, because essentially took what, take auto, homeowners, and umbrella, and Andover, Mass is a pretty affluent community. So, it's 3 policies. We're probably talking about tens of thousands of dollars of premium. And instead of like a lump sum, or instead of quarterly payments, or instead of monthly payments, it was amortized to the paycheck, which I think at that time was weekly.
Yep.
So essentially, and we got to do it at the agency as well. Essentially, you didn't even see it.
Right.
You didn't even feel it. And to me, when I went on Agency Bill, it was because I didn't feel it. It was just a better engagement, I guess. I don't know what the word is. It was just like, I just felt less negative about having to pay for insurance, because it didn't feel like I was paying for it. It felt like I was getting it for free.
Yeah, and so there's a couple thoughts on that one too. So the first one being, if as an agency, if the insured feels that you are doing everything to make it easier for them, right? We're doing this for you. We're making this easier for you. It feels better. No one wants to pay a bill. No one does. But if I have an agent that I know is, hey, we're doing this for your convenience, right? It's that type of thing. That's a much better feeling. But also too, the minute that you do things like that, where you set up a pseudo auto pay, or you make it much easier where things are automated, now you've increased your retention and the client is much more sticky, because they don't want to change it.
I like that, because now changing an agency means you don't get the agency bill. Like
Yep.
you lose that. I like that. That's a really big thing for agents that are listening. Like, once you have that would be huge. So I think we're going to transition the remainder of this conversation to essentially, okay, the agents that are listening, yep, I like this. I want more of this. I want what Nick and Crystal just talked about, right? We believe in customer experience and we want to control that. Okay. Crystal, you show up at an agency, they want Agency Bill, they don't have it. How are you preparing them for it?
Yep. So first thing, we've already talked about it. Make sure they have a trust account in place. Number one. The second thing that we're going to do is we're going to sit down and we're going to talk to the account managers, and we're going to tell them, hey, are you familiar with this? Do you know what we're supposed to do? Do you have any familiarity with E&S markets? And if they don't, then we're going to go over that. And the third thing that we're going to do is we're going to set up some type of invoicing workflow. I can't do anything if my staff's not trained, right? If your staff's not trained, it's not going to work. So we start there, make sure there's familiarity with the theory of it and what we're doing and why we're doing it. We also need account manager buy-in. So that step 2 is very, very important.
What manager?
An account manager, CSR.
Account manager and
Getting their
CSR buy-in.
buy-in on Agency Bill, really, really selling customer service.
So basically the agency owner should probably have a conversation first.
Yeah, I think so. Yeah. So another thing too is when you're setting this up, even if you already are doing some Agency Bill, but it's not mainstream and you're not really pushing it, you don't have this revenue share set up already. And if you are not doing agency fees, you have to get buy-in from your support staff. Selling an agency fee for me is no problem. I have no issue reaching out to an insured, including it on my invoice, having that disclosure form. I have no negative feelings about it because I know what I'm worth, right? I know what my agency's worth, right? some account managers are very hesitant to tackle on these agency fees. So it's not just the agency bill that you have to sell. You also have to get your staff's buy-in on agency fees, why they're valid, why they're important for the agency.
Is there a way to incentivize the CSRs and the account managers around that policy fee, around the, like if I were an agency owner and I was getting some resistance, even if I wasn't getting resistance, I would almost want to incentivize the staff. Like, listen, this is going to be ultimately the best way to manage our customer experience.
Yep.
And we have to use it anyways for E&S and some other pieces of business. If we master this, this will dramatically change the revenue profile of our agency. We're going to retain more customers. And I can see different ways, directly and indirectly, incentivizing the CSRs, incentivizing the account managers, you know, like, hey, listen, this requires a $250 agency fee, and every single one that you sell, you get half, or you get, I don't know what's fair, but you're going to get a piece of it. Now the account manager is thinking as part of the business and business.
They are. So a lot of the structures that we have seen is, you know, so for what this is worth too, there will be times that an agency fee will need to be excluded, and that needs to be the exception, and that has to be documented, especially when you get into states where you can't have any, there's an anti-discrimination piece of their regulations. You have to justify why you didn't do it. But a lot of these comp structures that I have seen, they'll say, okay, you know, you met your goal of 95% of these policies have agency fees on them, you get X amount of bonus. Or to your point, every agency fee that you charge, especially if it's over a certain threshold, you get 10%, 50%. That is up to the agency entirely, but that's a phenomenal way to get buy-in. I'm very like customer service. Here's the extra scoop of ice cream for your customer kind of thing. So, you know, I wouldn't necessarily need as much money, but I know most people, it's money talks. Money is a great incentive to get this buy-in. I'll take the money.
Almost all the time, the best incentive. Almost all the time. So the staff needs to be trained, and I think they need to continually be trained. I remember doing agency bill, and I remember someone coming in and creating an endorsement, and I had to have, you know, every agency has that senior lady who's been with the agency for 30 years, and she knows everything. Always done it. I'll call her Greta. Yeah. She knows where all the bodies are buried, and Greta would walk me through it. And then I wouldn't see an agency bill issue for a few weeks, and then it would come, and I'd have to go back. Claire, Greta, I need help with this.
So for what this is worth, agency bill is very OG, right? Like agents or carriers, that is how they used to invoice. So as I mentioned earlier, like with auto owners, Cincinnati, some travelers, those are legacy systems. That is originally how this was done, even back to the beginning of insurance. And that is a whole other podcast, another webinar that we can do on the history of insurance, maritime insurance. But it was built through the agency. So that is actually a very normal billing practice up until I'd say probably like mid 90s. We started to see this, you know, the advent and the pushing of direct bill, especially with your captive agencies. So your State Farms, your Allstates, they're typically your captives are typically direct bill. So trust account, staff buy-in, and then you have to set up your systems.
Staff training, systems, right? And I think compliance. So you probably need a compliance team or someone who's can know, like in the state of New Jersey versus the state of Nebraska, how those are handled. And here's the thing. I don't think we would be having this conversation if it wasn't the year 2025. I have always said InsurTech 1.0 was for the insurance carriers. Mm-hmm. InsurTech 2.0 began to spread out. So you started to see more InsurTech for claims, more InsurTech for data cleansing, and more InsurTech for agencies. The technology is finally coming here that can do the compliance, can have a nice, smooth interface for billing, APIing and connecting to different premium finance companies. So you don't have, the workflow gets reduced from a whole bunch of steps with a whole bunch of responsibilities and collapsing it down into a single step.
It's workflow consolidation, right? You think right now, even let's say you're using no additional technology than maybe a payment processor that's insurance specific and your AMS. So what most agencies are doing right now, they're invoicing it in their AMS after they have gone to another website for their premium finance quote. That's if the insured wants it or not. But they don't know if the insured wants it until they send them the PFA. And if they sign it, then they have to maybe adjust their invoice. It is a very broken process. And then you have then you have this e-signature platform that you send these apps through. There are so many steps and so many different systems. So this workflow consolidation, this technology consolidation kind of into one platform, it is a game changer for the industry. Because what used to take 30 minutes to 60 minutes can now take like 3 to 5 minutes. And that's pretty exceptional.
Yeah. So I think we've beat this down. I think there were pros and cons, right? I think to kind of summarize, this is not for everybody, but I like the way you framed it around, like, even if you're not using Agency Bill, or even if you have no excuse to use it, the world is rapidly changing. So you could be selling standard products in Michigan, but what is now starting to happen is you're starting to see carriers pull back, get really tight around risk appetite, and that business is going to be converted into excess and surplus lines. So every agency at some point is going to need access to it, going to need access to this. But I think we left enough breadcrumbs for them to perhaps salivate over what this could do to the valuation of their agency, just from all of the possible revenue enhancing stuff, and including the customer experience that leads to higher retention.
Yep, absolutely.
Okay, so that is the end of this particular webinar. This is broadcast on LinkedIn Live, which means it will live on LinkedIn forever until Microsoft sells it and someone kills it and gets the plug pulled. So wherever you're watching this now, this is where you can come back to watch it. And also down on the bottom, there is the comments. If you put in the comments and tag Crystal or tag myself, we will see those questions and we can answer those questions for you. So by all means, hope you enjoyed this particular webinar. Keep following, connect with Crystal, and if you have questions, please tag us. But until next time, Crystal, thank you for joining me.
As always, Nick, it is a pleasure.